Chapter 3 will focus on the importance of budgets. A budget is a roadmap to assist you in reaching your financial goals. It's important to remember your budget will change as you go through life, so you must be flexible depending upon your specific financial goals. Budgets require time and commitment. A budget can seem restrictive, but in the end will allow you to have financial freedom and more choices for your life. A budget tracks all of your expenses, large and small, long-term and short-term. A budget helps you control your money and reduce excessive spending. Having a budget in place can prevent added stress, bad spending habits, having no idea where your money goes, and the potential for strained relationships with your family because of a lack of savings. Who should create a budget? We believe everyone should keep track of the money going in and out of their accounts. Budgeting is for all people, rich and poor, young and old, whether you are employed or unemployed, no matter if you are self-employed or a traditional employee. How much money are you spending and saving? It's difficult to manage your spending when you don't know where your money is going. Track your spending for a month to see where you are spending your money. You can track your spending a number of different ways. You can track spending on paper, on your computer, or using various mobile apps. It is vital for you to understand the difference between a want and a need. If you find you are spending more money than you want on certain items, make a change in your monthly budget. Let's look at what we need to do as we create our budget. We must remember to include our expenses, savings, and income. What monthly payments will we have? A car payment, our phone, insurance, and other expenses. Then, think about your expenses. Your car needs gas, you have to eat, and you will want to get some new clothes. What other expenses occur on a monthly basis? Now we can look at what is coming in. What is our income? This includes your wages or salary, gifts, and other sources of income. Remember, with our savings, that it is best to try and save 10% of our income into some type of savings account. Do not forget to include your emergency fund. What happens if you need new tires or your dog needs a trip to the vet? It is a good practice to save money in an account you can easily have access to funds when you need them. Remember, this fund is for emergencies only. It is recommended for an annual budget to have 3 to 6 months of expenses saved in an emergency fund. How do I create a budget or spending plan? First, you must assess your situation. What is your current situation and what is your goal? Are you trying to add to your savings? Trying to prepare for unexpected expenses or emergency funds? Know what you are aiming to do. Next, set personal and financial goals for yourself. Take time to compare your spending to your budget. Review your progress and revise your budget as needed. Remember, this is your budget and it will help you to meet your goals if you pay attention to it. The most important key ingredient to being financially independent is to spend less than you earn. Here are some ways to reduce spending. Use coupons, use comparison shopping, avoid impulse purchases, eat out less, use frequent shopper cards. You can also increase the amount of income you are bringing in. You could pick up an after-school or weekend job. You could also babysit or help your neighbors with chores for extra money. Being financially fit is a decision you make each and every day. Creating a budget and adhering to it is a great way for you to be financially sound. True or false? A budget tracks all of your expenses, large and small, long-term and short-term. Who should create a budget? Poor people, old people, young people, rich people, or all of the above? The recommended amount of money to have in your emergency fund for expenses is 1 to 2 weeks of income, 3 to 6 months of income, or 1 year of income. True or false? The most key ingredient to being financially independent is to spend less than you earn.